Hello, and thanks for joining us today. I'm super excited you could be here. Look, today we're having one of my absolute favorite funding sources on the show. I mean, when you need to get working capital, this is the company to go to, and you're about to know why. So with us today is Saul Lax. Now, Saul is actually the CEO of Revenued, a leading fintech company that is actually dedicated to helping small businesses access flexible funding solutions. So with more than 15 years of experience in investment banking, venture capital, and alternative finance, he has built and led successful financial service organizations focusing on expanding to access to capital. So prior to Revenue, Sal actually held executive leadership roles across venture debt, mergers and acquisitions, and also small business finance. Now, he's actually widely recognized for his expertise in fintech innovation and for alternative lending and developing technology-driven solutions that help entrepreneurs secure the funding they need to grow and scale their businesses. Sal, thanks for joining me today.
Oh, thanks for having me, Ty. And I barely recognize myself from that intro, but that's very complimentary. Thank you.
Well, you've done some awesome things, but I want to hear from your perspective. How long have you guys been around, and what made you start Revenue to be in the beginning?
That's a great question. So the inception of Revenue really came out of a previous company that still exists, which is Pearl Capital. It was a merchant cash advance company. And what we saw at Pearl was that, first of all, that MCA is like a kludge. It's not a great instrument for most small businesses. You know, it's sort of like a little bit like a round peg in a square hole. It's somewhat inflexible. It is a good option if you can't access capital, but we thought it had some challenges and problems that we might fix. And we spent a lot of time looking at credit modeling when we're doing that, because what's great about MCA is very short payment cycles. So if you think about it from an experiment perspective, when you're trying to look at what are the results of what you're doing, right? You have a 30-year mortgage, it can take you 10 years to see if that's working or not, right? The difference is if you have something short term, you can see very quickly whether what you're doing works or does not work, right? So we had roughly about $1 billion worth of experience in doing that. We had built a lot of credit models around it. We got deep into machine learning and straight through processing using technology fairly early on. And then roughly right before COVID, right, we were about to launch Revenue, which was our new model, new company, new model, transition away from classic MCA to something that we thought was a much better mousetrap, much better instrument for a small business, better funding, more flexibility, cheaper. And then COVID hit, right? So that was the perfect storm. You're smiling, you remember. That was a perfect storm for us for a small business lender. I mean, it take you back to those times when it was like you were looking at the abyss, right? You couldn't really originate. I remember having a conversation with a board member where I said, Bob, let's call him Bob. I said, Bob, do you really want me to stop all origination? What if it's like a medical provider for somebody who has COVID and it's being reimbursed by the federal government, so you have no credit risk? So he said, well, what if the federal government stops paying? I said, Bob, if the federal government collapses, you have bigger problems than getting your money back. Right, you better have your basement fortified and have some way to make penicillin on your own. Right, so that's sort of the climate of the atmosphere. But we pivoted pretty quickly. We partnered with Cross River Bank, and we ended up processing $4 billion worth of PPP in Revenue. Right, so that was sort of trial by fire, and we automated and underwrote, knock on wood, pretty good paper, about 1 million applications for a PPP. When we came out of that, we got into full scale with Revenued, and we started originating, and we have grown now to be one of the top originators of working capital lines with an associated business card, which is a business card which is tied to the line, but can be used just like a regular credit card.
I love that. And all the time that I've been in this space, and then the lenders I've had opportunity to talk to, what you do is so unique. Like, I mean, there's just very few, if any, that really do what you do. And that's why what I love it so much, especially the business credit part of it, which I want to talk to you about in a few minutes as well. So give me an idea. If I'm a borrower, well, let's start there. What type of borrowers can you help? Well, if somebody's watching or listening to this, who is the type of person that should move forward with Revenue and apply?
That's a great question. So I think we have to think about, sort of probability, right, versus certainty, right? So who's likely to get an offer from us, right? What does it take to get an offer from us? And again, we scale, so like we're pretty flexible in terms of how much capital, right? We'll go from $5,000 on the low side in a working capital line to up to $1 million on the high side,
Wow.
right? So yep, we got plenty of we have plenty of customers that are $500,000 and above. And in that, actually, we spent a little time talking about machine learning and whatever. In that, we're fairly unique because there are some other competitors of ours that everybody's familiar with, like, Fundbox or Blue Vine or On Deck. They don't scale beyond the $200,000 level. And generally, that's for a really good reason, which is if you're purely just machine learning, if you basically eliminated all your human underwriters years ago, it's very difficult to do anything of a larger size, right? Machine doesn't have enough data to work with. You're not going to get an automated answer on a $700,000 line for a larger company that is different than any other company that you've done a $700,000 line for before, right? There's just not enough data to automate that decision, right? So we have a human underwriting team that's capable of handling that as well. We're very comfortable with doing that. We've done a lot of them, right? So in that, we're a little bit unique. But come back to who should apply. Don't really care about FICO, right? It's not a big thing. We don't take FICO score and say, hey, what's your FICO? And don't apply if you're below X. We are very sensitive to what we get out of Plaid. The models run on banking information. What's the consistency of deposits? What does your cash flow look like? So somebody who has consistent cash flow of over $30,000 a month, high probability you're going to get an offer from us. Again, there are certain things that would then qualify and knock you out of the box, right? Meaning, if we see a recent default on another business lender, right, that's going to be a disqualification, right? So to speak to your business, right, when you're looking at credit counseling, you're looking at, how is my business credit? While we might not look at it done in Bradstreet and incorporate that, we're definitely going to incorporate defaults, right? So we're going to get that information. What was your previous credit history, right? Not personal, I'm talking about business. How have you treated your vendors and things like that? And that's going to get incorporated in the score, right? So if they haven't gone through a remediation process with somebody like you, where they've managed to fix some of their previous errors and stuff like that's been settled, it dramatically would decrease. If they haven't done any of those things, it would dramatically decrease the odds of them getting an offer from us. We'll similarly look at things like, okay, obviously everybody does this. Are you on OFAX, do not fund list, right? Is the money going out somewhere? And then pretty much industry we're agnostic to, though depending on where you are in the credit cycle. There was a time when trucking was having a terrible time, right? Now it's pulled out of it. But 2 years ago, truckers, the default spiked heavily. If you're in an industry where it looks like there is much higher default risk, because that's what we're experiencing, it's going to be tough to get credit for that industry as well. But other than that, if you have strong cash flow and you have a cleanish record, regardless of your personal FICO score, the odds are, you will get an offer from us, right? That's a good probability of being able to get an offer. So don't care about the state, don't really care about the industry. It will be somewhat sensitive depending on flavor of the month, what's going on in an industry and what the default risk is perceived as, right? And rest of it is, it's not hard to apply. It's an easy application. If you need a lot of money, meaning your average size, demand on your line looks like it's going to be $300,000-400,000. We're one of the few games in town.
Wow, a lot of powerful things you just said there. A couple of things I think stick out is that I think it's interesting because it sounds like you service a business almost through the life of the business. I mean, once they prove themselves and start to generate revenue consistently, it sounds like you can help them in the beginning stages, not as a startup, but once they start to have tens of thousands of dollars in revenue, you're able to help them, and then you're able to help them all the way through a massive growth period. I mean, because to your point, like what I hear is that a lot of alternative lenders, let's say that lend money based on revenue or credit card transactions, they're not as low as you are on the loan amount. Like they're significantly higher, which means they require a lot more revenue to qualify. And then they're capped at 250 or 500 max. I mean, that's the norm in the industry. I mean, highest end. Yet you're able to go double that much or quadruple that much of 250,000. So then you're able to stay with the business a lot longer as they grow, where that business can have all those solutions to come back to you again and again. So I would imagine that a lot of people are coming back to you consistently to get more and more funding because you work with them through a lot of their life cycle.
So that is true. What's interesting really is it's a flex line, so it operates as a line of credit. Technically it's revenue based, so we wouldn't call it a line of credit, but it from the user experience is the same as a line of credit. So when you say they're coming back, they're actually drawing on the same line. They're using, they're repaying, they're using, they're repaying. It's an evergreen line of credit. You can think of it as a line of credit. And they'll just come back and say, look, I need an increase in my limit, right?
Right.
Initially, we're approved for $30,000. And, based on what we can see, right, we're still connected with Plaid and the bank account. The company has had dramatic growth. They're good for 100K now. The answer is of course, it's not even really a new underwriting, right? We're in the business already. We're still hooked up with Plaid. We can see that growth in revenue, and they'll get an increase in their line, right? So there is no actual like coming back and having to be re-underwritten. This is a line that will grow with the business.
So when they come back to you, then I'm very interested because again, this is unlike anything that I see that's out there. Even a Blue Vine that you mentioned before. Like first of all, they're more credit stringent. Like I'm starting to see more and more and more they're relying on personal credit, and I don't. I might could be wrong, but I think their cap's like 150. Like they don't really like to lend higher than 150. So they're on the very low end of this. So when somebody's coming back to you, what is involved with getting their limit increased? There is no underwriting process then? It's just that easy as when they get the credit
No,
line, the credit line grows with them?
it's really seamless. So someone will get a decision within 24 hours, right? So I may actually have a human analyst look at it, right, and just say, what do you see there, right? Do a reality check again, but it's really not a new underwriting. The reason for the caps for other companies is that again, machine learning and AI is fantastic, right? But it also has significant limitations that human beings don't, right? It's a very interesting thing. I did not think of this when I first was starting with this, right? At a certain point, there was, we had human underwriters that we built stuff around, right, which were helpful in building all the machine learning and everything. But I really thought like, oh, the ideal is you're going to go full cabbage or front box or anything like that. And at a certain point, you're just not going to have any human being sitting there, right? What you notice is, first of all, like if it's anything atypical, your data set or your machine learning is not going to be useful, right? Human beings are pretty good at adapting to or getting their hands around an atypical situation. It's not exactly like everything else. Now, you don't got to do that on a $10,000, typical retail, hamburger store, a hamburger joint. You may have already underwritten 2,000 hamburger joints, and there's a profile of it, and the machine just knows exactly what to do. And it'll be more consistent and better than any person, a human underwriter, looking at it. They'll be faster. You don't have to pay them overtime, right? There's a lot of really good advantages to it, right? But when somebody comes in and they say, well, I have this person who is making this particular type of piping that is being used by, these 5 customers, right? And it's like really like different, right? And you've only seen, 3 pipe manufacturers in the last, 2 years of that size. You don't have a whole stable of pipe manufacturers that you've ever underwritten beforehand. When you take a human underwriter will look at it and say, well, good looking cash flow. So let me get the guy on the phone, right? Let me talk to that business owner, right? There is a human being that the business owner could connect to. That person will talk to them. They'll discuss how their business is, how they're looking at it. They'll explain the financials, right? It might be 20 minutes. All of a sudden, you got that human connection and human understanding, and you say, "Great, I'll give this pipe guy, right? I'll give him, a $500,000 line, and it's not a pipe dream, right? It works, right? And you're happy with it. They're happy with it. The credit works. You may have that human analyst check in again when the guy wants an increase for 750, but it's this hybrid model where you can leave it on sort of autopilot for most of the time, right? Human analyst is not checking in every day. They're not checking in every month. They're only checking in if something blips is really strange. You can think of it. I don't know. Do you use auto? What do you use in your car? Are you like a Tesla guy, or are you a guy who likes to
I
have a
am
good
a gas guy now, and I'm literally in the middle of potentially switching to a real hybrid. Like, I'm stuck because I've actually went to my I'm a Mercedes guy. I went to my Mercedes guy, and I'm like, I don't know what
really?
to do. Do I get this hybrid or not? So I'm on the verge right now of
But in
crossing.
terms of like auto cruise, like what do you use for like when you're driving for a long distance? You take your hands off the wheel and let the car do it.
I'm not there yet. Yeah, I'm not there yet. I'll let it control the
Right.
speed, but not the
Right.
steering. I'm not ready to give up that much control just yet.
I'm sort of in between, right? So like, yeah, I'll take the lane assist or whatever, but especially if like I'm driving someplace up in a mountain and it's a little curvy and what I'm not about to trust. I'm not about to take my hands off on that, right? So like the hybrid thing works. Like it takes the stress off the typical situation. If you're driving down that straight, 95 and it's a little heavy traffic and you're getting tired of keeping the distance between the next car, you're very happy that your car has those features, right? But when you're in like an atypical situation, you don't quite trust it yet. And I don't think that this trust is irrational, right? Maybe my kids will trust it, but at this point I'm still like, okay, I still would like to control the car, right? You can think of that when you're pushing that into underwriting and you think about, okay, what do you want to trust the AI to do? Right. So you might say, I'm going to trust it on everything. And then sooner or later, you're going to bang your head against the situations where AI is just limited. And it's limited not because it's defective, it just doesn't have the data to pull in that mountain road. Right. And you go like, oh, where's my driver? Right? And you go, oops, I don't have any drivers. I fired them all. Right? I eliminated all the drivers because the Tesla auto drive, auto cruise was perfect. And then you realize, well, it's perfect within its limitations. Maybe it's better than a human underwriter within certain limitations, but on the edges, it's useless. Right? There's still a lot of edges, right? And it's those edges that having that additional capacity is useful. The other thing to think about, which just peek under the hood. I don't know if your borrowers are interested in this, and please interrupt me if this gets boring. But you think about where does your lender get their money, right? Everybody goes, oh, lenders have a lot of money. You must be sitting on a big pot of money. Well, no, lenders don't have a lot of money, right? It's not capital efficient, right? We're not. Some are banks. In that case, it is capital efficient because they're taking depositors' money and they're pushing it out. But most fintechs and others are not banks, right? So you're not sitting on a pile of depositor capital. So what are you doing? You're either securitizing, which we do, right? You have bank lines, which you may have. You may have credit fund lines, right? And then you have like equity supporting it all, right? So lenders of businesses, just like their customers are, just like small businesses are, right? Everybody is a business. Ultimately, you got to figure out how do you finance what you're doing. You can think of the loan book as your inventory, right? How do you buy your supplies? How do you buy the money? Where do you get that from, right? So the more custom something becomes, the more it doesn't fit into a really cheap source of capital that's securitized, right? You can't just push it into the securitization. So everybody might have a limitation that says you can take any deal, but it stops at $200,000, right? Because think of the securitizations perspective. They're looking at it and going, I want a pool of a bunch of things. Think of like Fannie or Freddie and home mortgages. I want a pool of a bunch of things that look so similar that when I rate this thing, it's going to work in the mass. Like even if a single one doesn't work out, it's enough homogenized group that it's going to work in totality, right? Now, if you have everything like this height, and all of a sudden you got what in comparison is Mount Everest sticking out, that's the $1 million loan you did, right? Whoever's doing that is going to go like, no, 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 that's like really weird, right? If that thing pops, it's going to mess up your numbers. It also doesn't look like anything else because it's that pipe manufacturer. Everybody else is like smaller and different industries and well diversified. Like, what are we doing with that? So they go like, no, no, you can't put that in the pot, right? And you have that same problem, that same challenge all the way up, call it the food chain or the different sources of capital. The bank might say, you might have a warehouse line at the bank. The bank goes like, same problem. We don't want to put that in the books. Or if you do, we're only going to give you 20% credit or 30% credit against it. You have to come up with equity for the remaining part. So part of the challenge for anybody sitting in my seat, right, including our competitors, is what's your source of capital, and can you have your range to take care of those one-offs. Well, at a certain point, the one-offs become dozens or hundreds. And then you have a real challenge, which is figuring out, how do you place 200, 500,000 to $1 million deals? Now it's added up to something that is a decent sized check, right? So figuring out where your capital is coming from and how flexible it is and your cost on it is a big part of the puzzle for people like me. So if you're a small business and you're going like, oh, it's all the same, it's not all the same. And having somebody like you advising them and figuring out which pocket of capital is the most efficient for them, is going to be the cheapest for them, is going to be the most flexible, that takes real knowledge because it's not all the same. Fundbox might be getting their capital from a very different source than we do, right? They all do not have, most of the fintechs, they do not have the human underwriters backing it up to be able to go over 200. And they might not have arranged, because of that, also the sources of capital to do that, right? So take somebody sitting in your seat who understands all this, who understands the background and understands the different constraints that all these multiple lenders have, and will say like, hey, this is not perfect for that, it's not perfect for that, but it's actually a fit for these guys, right? It's a complicated puzzle because there's a lot of stuff moving around in the background. Another example is a lot of people come to us for very short-term capital, right? Because we have designed in the product a much cheaper cost of capital from the 30-day usage. And we don't have line fees, right? So there's no minimum draw fee, there's no minimum draw. So it's very flexible that way, right? If you are some of our competitors, it's tougher to design for that because depending on where you're sourcing your paper and your borrowers from, it might have cost you more than that to find that borrower in the first place, right? So there's a lot of economic or market position choices that you make that determine what your product looks like and to determine on the borrower side who's the best fit for that. And again, like it's great that you guys exist because what we love having is a well-educated borrower who's looking for capital, small business. They understand it already because you've educated them. And they're walking into our door and they're going like, I have realistic expectations. And by the way, 45% of my use case is going to be to cover a less than 30-day shortfall. So you guys are the cheapest. And it also happens to be that I need $400,000, right? That like unique combination of those two things will probably box out almost everybody else, right? But who knows that if you don't know that?
So, what you guys do is absolutely amazing. If somebody's watching this right now, this all makes sense. They want a real credit line, not the advances and the stuff that so many out there are specialized. They want to be with a company that's going to actually grow with them and be able to do what you guys do. Where should they go? What steps should they take to actually apply and get approved?
Yeah, you go to our website, revenue.com, learn
Okay,
about
so
the product. There's an application there. It's pretty straightforward, pretty quick.
about
It'll
how
tell you
fast before they can usually get a decision?
same day. I mean, depending on the size. If they're much larger and they're looking for over 500K, it may take 48 hours. We'll ask for we don't ask it for the smaller ones, but we'll ask for tax guard on the larger ones. We want to see a tax return.
All right. So I appreciate it. Thank you very much for your time. Thanks for coming on with us today.
My pleasure. Thank you.
All right, so listen, if you're watching this, you really should go to revenue.com. Let me tell you what I love. Okay, they are really what they do is so unique that they're really, in my opinion, the only one that does what they do. First of all, most entrepreneurs want a line of credit. They don't want credit cards through credit card stacking. They don't want loans. They don't want advances. What they want is a true line of credit, right? But the problem is historically in the industry is you have to be SBA worthy to get there. Like in real lines of credit usually require such substantial qualifications that very, very, very well-established businesses are the only ones that can ever get them. I mean, great consumer credit, great business credit, great revenue, tax returns for years, and I can go on and on and on. The requirements, because these lenders are on the show. You know how hard it is to get those. But revenue fills this void that really nobody else fills. They're able to actually help you based primarily on your revenue, come in and get the money that you need at a very high limit. I mean, they can start you at 5K. They can get you all the way up to $1 million finance, a true line of credit, and a line of credit that you get even if you are in the beginning stages and you've got tens of thousands of revenue, you don't have hundreds of thousands yet. Well, then they grow with you, and that line grows with you. A true line of credit, some of the cheapest money that's out there. This is why they have thousands of positive online reviews, and I mean they serve a part of the industry that nobody else serves. So go see what you can get approved for right now. It's really simple. You go to revenue.com. You just click apply now at the top right, and then from there you can find out same day the kind of financing you can actually qualify for. And while you're at revenue.com, go to the bottom right of their page and just subscribe on their social channels. It takes less than 1 minute to do. And you can hear from Sal, like they are the most advanced when it comes to technology, one of the most advanced of any of the fintechs that I've dealt with or had experience with. So you want to see what's happening in this world of AI where things are rapidly changing. They are the ones ahead of the curve. So by following them on social, you can see what's coming up now and what's coming up in the future. So go to revenue.com right now and click apply now to see what you can get for a credit line, and a credit line that actually will grow with your business. So check them out today at revenue.com. Thanks for tuning in. Take care and have a great day.